Chris here is one of the world's top chefs. He's an extremely busy man. He's cash rich and would love to put some of that spare money into trading, but he just doesn't have the time. He knows he's going to get frustrated. He wants somebody, a professional, to trade for him. He's in luck though. The Stop Hunter has the perfect solution for him. It's called IGO-X. It's a fully automated copy trading service built by the Stop Hunter to give you access to global markets 24/7 and to potentially access the Stop Hunter's higher trading returns. Learn more and get signed up by visiting our website www.igox. Hello everyone, welcome to today's show. First of a double header in the energy sector. First up at 11, as is always scheduled, is WTI Crude Oil, so 11:30. And 1 o'clock, that's GMT time, we've got Nat Gas for you. But first, WTI, what's been going on since we last met? Still that bullish theme to the prices, most likely driven by the OPEC plus Saudi-Russian potential production cuts. We've got a bit of a shale production issue in the States as well. Creating a lack of supply there. We've also got interest rates out this week, which will be a key determinant in economic progress or not, as may be. And that will also impede or impact demand that we can see from countries like China, the US, China especially the biggest user supply, sucker in of those oil supplies into their country. So what goes on there, very important to watch out in the global context of crude oil. Let's get into the detail straight away. Let's see actually what's been going on this morning in the charts, and it's been a reasonably good start. You can see that yesterday sell-off, and then overnight we had that gain up from about $90 to 91, sitting, well, it just peaked at 91.5 sort of zone, $91.6 earlier this morning. That's about 9:30, 10 o'clock UK time. Then we had a bit of a bumpy rise since, but it's staying in that sort of block zone there, 91 to 91.5 Let's get into some fundamental stuff then. And Baker Hughes rig count starting to look a bit better from the prior count, up 9. I use that US line as my gauge there for sentiment in the rig count readings. And change from last year, still negative, minus 122. So call that a neutrally weak bearish type picture. Inventories, again, I only use this when there's outlier moves against the forecast. Last week, forecast was minus 1.9 million barrels, and it actually came out worse than expected, 3.954 million. Haven't got the forecast out yet this week, so watch out for that. Released, as it says there, September 20th, 10:30. So like I say, look for the outliers. Statistically, it doesn't give you any real advantage just trading these numbers, but what I have noticed is they do kickstart trends, like I said, especially if they are outlier results from forecasts. So what else? Some sentiment. Let's go to seasonality down the bottom there. And unchanged from last week, I would call that weak bullish. You can see the pattern there. Before we get into mid-October, starts to go sideways and down into the beginning of December before once again climbing again. Commitment to traders data. Those who watch this program will be aware of how I analyze this bit of data. Large commercials, I want to see the inverse. Large speculators following the actual price there at the top, and they're doing that quite nicely at the moment. You can see large commercials down, large speculators up, the price up nicely, so bullish there. That range from 64 to 83 still broken, pushing up to that $90-91 Fibonacci line there. suggest that's probably the pullback if it holds there for longer term gains. But we're looking to some charts in a minute for that sort of analysis. Volatility, what's going on there? Just picking up slightly, nothing too exciting, still trading under that longer term moving average, but into the cloud, looking a bit more neutral at the moment. I like to see it under there for more bullish type of setup. And this is my currency index of countries that are involved in the oil industry, heavily involved and impacted by them. And as you can see, as we've seen the price going up this week, their FX price has also risen. That is a basket, is a useful gauge to add into the mix when trying to piece together what's going to happen next. So bullish there. So this is our longer term price view. Before we get there, let's summarize what we've seen. It's still a mixed bag, but just got that feeling of weak bullishness, I would say, in there at the moment. So let's have a look at some longer term price action. Anything changed again from last week? I'd say probably not, other than we're seeing the price moving up from the lows of that 2 standard deviation regression band more to the mean, and the mean price is sitting around $98. Point of control is at that Fibonacci line, $66. Then we've got that sort of scoop either way, a lack of volume, which can make it slip quick either way. Top band, that's a way up, $130 nearly. That would be interesting to see again. March last time, 22, we were up around those sort of numbers. Downwise, the bottom band there, just under, like say, that point of control, $65, call it, and then 38.2% key Fibonacci line at $51. Those interested in some reversal price action, we got the 4-line break chart here, and it's a 4 setup, and I'd trade it 4-2, so I'm a bit more aggressive. We got here on the daily version of that a bearish setup coming into play, so we'd be selling around about $89, and a bit more conservative, not much more conservative, $88 move to that downside there. Again, you can adjust in that time period to be more aggressive if you want to. Let's just change it down to an hour, remove the drawings there on there. What have we got? And we've got a similar short reversal possibly coming in here around about early $91 for that move down. So something to watch out for those traders who like the reversal type setups. And then into the Renko charts, we'll start with a longer term price action using $1 block size. See that nice trend we've been talking about moving on up there. Point of control at $71.50, $71 around there. A lot of noise price action, as you can see through there. Stochastics at the bottom pointing bullish. Where could we be heading next in terms of the Fibonacci's? Well, we've got 98 2/3, then 102, then let's call that round that up to 108 to the upside. Expect some sort of pullback in the price before that would happen, and if it does pull back, use the Fibonacci as a gauge. We've got that 61.8% line at $81.25. Notice the volume as well. It does sit also at that level, so that looks like a good strong pullback zone if you want to bounce and go that way. Again, if it reacts and stays negative, then we've got the 38.2% line at about $75. Again, volume spike at that area, and then that slip down to that 71 point of control area, which also ties in with the 23.6% Fibonacci line. But at the moment, all looking quite nice and bullish. Focusing on the short term, quarter of a dollar block size. takeaways short term, currently bullish on the stochastics there. Point of control, short term wise, $79. We've got that arc there. Pullback situation short term would be about $87 and a quarter dollars if you're looking for a rebound. No price action in over there. If it slips further, 61.8% Fibonacci line at $82 and a quarter dollars. Then, like I said, that point of control, 79 a third, and under that, 38.2% line at 76 and a half. Upsides, shorter term, like I said, we've got the highs to break through here at 91 and a half, and then, like I said, that 98, the early hundreds then, which be interesting, 101 and a half, 106 and a half, possible upsides there. So that's a quick look at WTI crude oil. And in summary, there's mixed stories being told in terms of fundamentals and sentiment. Sentiment looking a bit stronger, those large speculators and commercials. Normally a good longer term gauge of where things are heading next. That gets updated on a Friday, that information, so watch out for that space. That's from the CFTC. Chart wise, like I said, looking bullish, maybe a bit overbought possibly in certain time frames, maybe an opportunity to buy the pullback, buy that dip because of the other outlying information like the OPEC plus production cuts. But watch out for interest rates later this week from all over the world, UK, US, Japan, Switzerland. See how that affects and impacts the market, and watch out for Chinese demand as well. See what that's playing like. Bullishness from there. Expect that crude oil to move on upwards and vice versa. So there you go. That's WTI. Shortly coming up, we have Nat Gas at 1 o'clock UK time. So I hope you can join me there. Hit the bell and subs buttons and notification buttons to receive more information, updates on these sort of content, these shows, and anything else on the channel. And if you've liked the today's show, please give us a thumbs up. And all that's left for me to say is thanks for watching. Good luck with the trading, and hope to see you all soon.